Brilliant. So, as I mentioned, I briefly alluded to Alexander and Giorgio's role. But why don't we start, Alexander, with you introducing yourself, and then Giorgio, you can do the same. Hopefully, everybody knows me by now. And then we can get into some of the questions, and then we'll take some time for Q&A afterwards.
Thank you very much, Ben. My name is Alexander. I am CEO of VNX. VNX is a token generator located in Liechtenstein, and we have VNX Gold, which is a token backed by physical gold stored in Switzerland and Liechtenstein. So we have two partners, two vaults. One is located in Liechtenstein, another stores gold in Zurich. One token is 1 gram of physical gold. We only deal with LBMA 1 kilogram gold, and the tokens are generated on request of the customer. So when the customer comes and would like to generate tokens which are representing ownership of the physical gold, this is when the token is created, and we're very happy to partner with metals.io.
Thanks very much, Giorgio. Do you want to go next?
Yes, so thank you so much for having me here. My name is Giorgio Donà, and I'm a lawyer qualified in Italy and Spain, and RWA is my passion. So since the term RWA was not invented, so in 2021, I started with the tokenization of a totally different commodity, which it was carbon credits at the time, with the project that it was quite successful at KlimaDAO, and I'm one of the founders. And I've always tried to see, I always see the upside of having RWA tokenized. So basically removing the gates. We're going to talk about that later. So it has always been very, very interesting for me, this kind of venue. And I always continue with this. And now I'm working with Neumon Tech and as a CLO. And also I do a little bit of product when necessary. And I'm mainly focused on this. And I'm very, very happy to be here today because there is the launch of the Rare Earth Tech token, and with the most successful protocol for RWA in metals, because there's nothing else to say. Like you're the best. And also remember when I was still working at Klima, every time that they had to mention RWA's successful, it was always uranium.io. So I'm very, very, very happy to be here.
I really appreciate that. So let's dig into some of the themes. Let's start by looking at building tokenized commodities. So you're building separate things, and Giorgio, you've previously worked in a different asset class altogether. What surprised you guys the most about the gap between the theoretical promise of tokenization and then the operational reality of getting a product to market? We're all at different stages with products going live, but what's been the real challenge there, and what surprised you as part of that journey?
For me, for sure, I underestimated the adoption time. I did feel that the new technology will be much quicker to penetrate the traditional financial players, but it's just a sheer size, I guess, and different burdens, legacy, regulatory constraints, all of this put together lead to a very, very different timeline that I initially estimated. What is flip side is that currently I think we do see the turn of the huge supertanker towards the tokenized commodities, or more specifically metals, recently. And we see the development of the lending and borrowing markets. We see the developments of the perpetual markets. And since these are all based on the blockchain technology, we feel that sooner or later there will also be a shift of traditional players coming here. So the infrastructure has now been built. Now the first money is coming in. And of course, you're a big part of building that infrastructure. And then it just needs the first big players to come to the market for it to take off.
Brilliant. Giorgio, any thoughts there?
Yeah, I'm going to say something that not everyone will like, but that's why I'm here, right? So in this kind of asset class and in RWA, it's easy to build in 2026. It was very complicated before. When, for instance, you launched, it was very, very complicated. The moment that you have the right partners, it's easy, let's say, okay? The most complicated thing is getting the adoption and getting like the market to pick up. Let me explain you what I mean with that. So these kind of markets, as they are, their nature is to be institutional. Okay, so institutional, there's many parties, traders. There's not really retails. Okay, it's very small part. So all these markets, they used to be only over the phone. So they would even not maybe take the call. So if you wanted to buy something from this kind of brokers or this kind of asset class, right? So with blockchain, we're removing those barriers, which is the most important thing. But even if we're doing it, even if we're successful, even if we have the best legal infrastructure, even if we have the best technological infrastructure, it's very complicated to have institutions to come to you. So the challenge and the gap now is to prove to the institutions that everything works properly, works in the same way, and it gives you an advantage. Let me give you like I'm going to be very quick, but this is really something for me which is it's very hard for me. If you want to buy some kind of asset class and some commodities, you need to first know what you have to buy. Second, know where to buy it. Second, you need to call, and you need to wait that they take the call. You need to be accepted. You need to do the KYC. You need to do the KYB. You need to pay. So the wire takes 2-3 days. You need to get a quote. Maybe the quote changes. Everything is very complicated. With the use of blockchain, we can literally kill those barriers, and we can have everything much faster, and we are removing all the gates. So this is very important. And at the same time, traders and commodity traders that they're doing this since, I don't know, 20 years, 30 years, whatever, with us disrupting the market, meaning innovators, okay, disrupting the market, they have the feeling that, as somebody said, there are barbarians at the gate. So it's a little bit complicated for them to adopt the technology. But the moment that they will understand the technology can give them a huge edge, at that point there will be no gap. That's my take.
That's great. Let's move on from sort of the building and challenges to sort of thinking more practically around market structure, pricing, and what comes next. So, Alexander, tokenized gold is a pretty crowded space, whereas things like tokenized uranium are quite novel. But more broadly, what for you and the VNX team determines if a commodity or a metal is actually suited to tokenization versus, to sort of crib from Arthur's presentation earlier, being a solution looking for a problem?
I think the key point is demand from the market. And I think we are discussing several other metals. For us, the key is the presence of the platform such as metals.io and a determined partner who can help this kind of distribution, so to say, happen, or adoption happen. That's the key, because per se, it's a product which was built in the search of the market fit. No, it should come the other way around. Market, a partner who can help distribute and market it, then I think it's worth considering.
Any thoughts, Giorgio, on that piece?
I think that you said everything absolutely perfectly, but of course, like, it requires a lot of knowledge to understand exactly what is the right model to follow. And of course, like, in the end, there's only one judge, the market. So there's not much that we can do. We can do all the theories that we want, but it's always yes or no. So there's nothing in between. So I think he said enough.
It's a really nice segue. It's almost like we prepared for this. So thanks, Giorgio. In terms of that piece around the market and the market being sort of king in all cases, how do you think what we're building and what's being built in terms of the tokenization of commodities can really move the needle in terms of pricing dynamics? So gold has deep, transparent spot and derivative markets. That's not the case in a lot of these other metals, and that's the opportunity, as I mentioned before, that we see. Maybe starting with you, Giorgio, how does tokenization support and interact with that price discovery? And can on-chain markets genuinely improve the transparency and liquidity for traditional opaque commodities?
Okay, this I think is the best question that could ever been asked, because I really want to stress this point when somebody asks me and when there is this occasion. So the best use for blockchains and RWA is transparency and price discovery. As I said before, I really want to do that example again. The moment that you want to buy something and you have to call one broker, you will have one price and you don't know if the price is correct, and it's the same price that they're giving to someone else. If you will call another broker, he will give you another price because, I don't know, maybe he wakes up, 2 hours before and he doesn't want to deal with you. So there is no price discovery in a lot of markets. While on the other hand, if we have these markets totally on the blockchain, we finally have price discovery because you own the website, you know exactly how much is trading and how much is the price. That's the most important thing. And that's also why in some kind of commodities markets, we innovators, I say we, everyone, we're hated because there is a lot of people, a lot of traders, a lot of institutions that they make a lot of money on this gray area, and on these gray prices, on this gray area. So not everybody likes what we're doing. Maybe also that's one of the reasons I didn't say that, because the institutions, they do want to adopt us, as I said before. But on the other hand, from a technical standpoint, the blockchain is amazing for the price discovery. For instance, a market that is very illiquid. Okay, let's not talk about metals, but in general, a market of commodities that is very liquid and is very gray. First, you solve the problem of the gates because you just need a wallet in order to access to that commodity. Second, we just said that we solved the price, the price issue, which it's going to be transparent with the blockchain because blockchain is numbers. Third, price discovery. A moment where you have a market that again is illiquid, or it's liquid but it's very deep, but you still do not have a price, you have the amazing system of liquidity pools. Liquidity pools are governed by the smart contract. Therefore, the moment that you buy, the price is going to change, and you can, with a single click and with a single smart contract, price something that it wasn't priced before and that just moved in the price right before. So in my opinion, blockchain is absolutely necessary in these kind of markets and is the true game changer for this kind of commodities market.
I mean, here, an important point from my point of view is what you're creating a water hole. I mean, we're a token generator. We can, if you come to us, generate whatever, doesn't matter. We can do it. However, a single point, be it gold, be it silver, be it platinum, etc., is just one metal. What you're creating is a place where traders, where professional players would be coming to participate in this, that, or that market. And therefore, this water hole concept is very, very important. That, I think, what you are doing, and I think that's what will move this market and will create acceptance.
Can I say just something else? Because everything is in my mind and I want to make everyone clear. So for gold, for instance, we do not have this issue that I just said. But we can basically, because of course it's a totally different market, it's much more deep and liquid, but we can have a same liquidity pool system on gold. And it will create numerous new opportunities for trading, for price discovery. Again, maybe there's going to be two different markets, the physical or the bank, let's say, the bank or the blockchain. So it's so interesting, and this should be really applied for everyone. The blockchain is the problem solver. Sorry.
No, that's great. So that's an opportunity, right? I think we're all here because we believe in that the invisible hand of the market. And actually, I would summarize that as even if there is parallel liquidity pools to start, they're still of benefit. And actually, if you are an institutional player watching this live stream, there may be arbitrage opportunities that you should look at and participate in. And so I think I'm conscious I want to give time for questions. Let's just do a rapid one sentence, maybe two, specifically Giorgio. Kind of in the next 12 months, what really needs to happen for this to sort of move into the stratosphere and be as successful as we think it can all be in terms of not metals.io, because we've got a lot of belief there, but tokenized commodities more generally?
In my view, metals.io would be the platform, water hole. In order to drive liquidity, in order to drive interest from the traditional players, you have to have arbitrage opportunities, meaning it needs to be pools on different DeFi platforms. You need to have lending and borrowing markets. You have to have perpetual markets. And then you have to have some other financial products which are built on this. all of this will drive the volume and demand on the spot market at the metals.io. That's if it's done for at least one or two products on the metals.io, will show a blueprint for the others, and in essence will confirm that these 12 months have been like a MVP, which works, which functions, and it just needs to scale.
You're ready.
I just want to make sure we have time for questions, Giorgio.
Yeah. The only thing, I promised to a colleague that I wouldn't do any bad jokes, but the only thing that I can say is that I hope that in the next 12 months, the market settles and the market's going to be flourishing, because now, of course, there is a lot of uncertainty. So the only thing that I hope for myself and for everyone is that there's no, there's going to be certainties and not uncertainties. So that's what needs to happen.
No. Uncertainty is good. Volatility.
So it's almost like you want diversifying assets in uncertain markets, which maybe we've got the answer for. It says I've got 4 minutes left here. Are there any questions from the audience?
Who likes volatility in the markets?
Okay, I'll kick off. I have a question for you. Would you say we're still early in tokenized commodities, or have we already started seeing real traction?
I would like to answer that, because I started an RWA protocol in 2021. So are we early? No. Why? Because now everybody is doing that. But as the market is saturated, not of course in our space, but as the market is saturated with RWAs everywhere, only the good project will survive, meaning that the market will cut out itself, the other players that they won't be as good in operations and in what happens in the, let's call it back end, but what happens that you don't see. Only those players will move up, while the others are just going to die out self. So I don't think that we are early, but I think that there is a lot of players coming up now.
I'm going to hedge my bets on this one. So I think we're at the end of the beginning. And I think what I mean by that is that we're transitioning into a different phase as we think about tokenization. I think what we've proven with uranium.io is that model of taking an SPV, going and buying some assets and then tokenizing the shares of the SPV and creating the situation where you aren't holding the underlying, but you're holding something where you're exposed to the benevolence of the SPV sponsor. I think we're beyond that now. I think what we've shown with common law frameworks like we've done on uranium and we'll be doing with other metals coming up and the teams have done here is that actually we're in the phase now where we're moving towards using blockchain and tokenization for what it's really meant to be for, which is evolving and improving the market infrastructure to break down all of those barriers, to deliver on the promise that blockchain, when I was at Morgan Stanley, was sort of the fear that we all had, is that it's going to revolutionize the market infrastructure, and what are our trading desks going to do? What are our portfolio managers going to do? Actually, what we've been doing until recently is building things in silos that are new assets, that are interesting, that deliver phenomenal returns for people that have made lots of and lost lots of money. But actually, I think we're now in this phase where people are looking, to echo the theme of today seemingly, to actually solve real problems with the technology. And I think that's what we're fortunate enough that within the Tezos ecosystem we can do, because we've got great technology. And we're really excited and seeing a lot of interest, not just from a participation perspective, which is great, but also from a business perspective, in people starting to recognize the opportunity in this sort of business, as I would call metals.io, sort of trying to transform those markets.
Thank you very much.
Thank you. Thank you.